Hello guys, welcome back to a new episode, RALLYTOP INVESTING 3.0 SMC Masterclass here. In today's episode, we want to continue with the concept we proposed about 5 months ago. The title of that upload 5 months ago was 1D candle equals 15M entry strategy, and that video attracted massive attention, and I got tons of inquiries from traders like you out there who asked me to further simplify that strategy for them. So this, if you like, can be called part 2 of that video we uploaded 5 months ago. If you haven't seen the video, I'm going to leave the link in the description so you can check it out before you look at this one. This is a very powerful reversal setup strategy. I try as much as possible to simplify everything so you don't need to have that headache in the market. I've already gotten the headache for you. All you need to do is to stick with me to the end of this video, because if you skip any aspect of it, you may likely have some troubles trying to implement this strategy. Now, the first thing you need to do is to go to your daily time frame. When you get to your daily time frame, you are not going to be looking out for any structures in the market. Reason is simple, because we are looking at the daily time frame. So you are going to be watching the daily candles each day. Once the daily candles are formed, you are not going to trade on that day that daily candle formed. You are going to trade the next day if it gives you the pattern I'm about to show to you now. If it doesn't give you that pattern, sit on your hands if you are going to be using this strategy. Okay? Now, let me tell you what you are going to look for on the daily time frame. Each day that the candle on your daily time frame prints, please mark out the high of that candle, just like so, and then mark out the low of that candle, just like so. Okay? And then wait for price to either break the high or the low with a candle wick, not with candle closure. If it is with a candle closure, you don't need to take any trade there based on this reversal strategy. Okay? Now, what you want is for it to break either the high or the low of that previous day's candle with a candle wick. That must happen. Okay? So if that does not happen, sit on your hands. So if you look at this, look at the high and the low of this previous day's candle. The next day's candle closed below it. So if you are going to be using the strategy that I'm about to show to you to trade, this is not a good day for you to enter the market, because this indicates a continuation. Remember, the high and low of a daily candle are huge liquidity pools. So each time price breaks either the high or the low, you will know one of two things. Either price is continuing in the prevailing trend or it's reversing. Now in this case, we are looking for reversal trades. Okay? So it closed below, so we don't need to take any trade. Now, after that day, we have the day's high right here, and then the day's low right here. So as you can see, it broke to the downside with a candle closure. So you still don't have opportunity to enter the market. It doesn't matter, guys. All right? It doesn't matter. Learn to be patient in the market. So there was no setup. If you are going to be using the reversal setup strategy that I'm going to show to you now. Now, another day, you mark out the high and low, just like so. Why did I skip this small candle? Because it's an inside bar in between the high and low of the previous candle. So this is insignificant. So the next candle is this. You mark out the high as well as the low of that candle. And as you can see, it broke to the downside as well and closed below it. This is not what we want. So you sit on your hands. And then the next day it printed this candle. Mark out the highs and the low as well. Like so. And this is the low of this candle. Now, what do you observe here? You see that for the first time in 1, 2, 3, 4, 5 days. Okay? This is the 5th day and price broke through the low. But this time, it did something different from what the remaining 4 days did. Okay? It actually took out the low of the previous day's candle with a candle wick. This is exactly what you want. Once you can find this, after taking it out with a candle wick, the candle closed above the previous day's low. That's exactly what you want to see on your higher time frame. That is the daily time frame in this case. So now you have a high probability scenario in your hands. So what do you do from here? Now that this pattern has formed, what you do from here is to scale down to your lower time frame, and that's where it becomes very interesting. Now, this is your daily time frame, and this is your 15 minutes time frame. Okay? Now, on your 15 minutes time frame, you'll be seeing price making lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now, on your lower time frame, you want to wait for market structure shift. What do I mean by market structure shift? After taking out this low, you want to wait for it to go and take out this high. It's a very simple strategy, guys. Take out this high. As soon as that high is taken out with a candle closure, you now want to wait. You know that price is most likely to start going higher. So what do? You need to just mark out this zone, the entirety of this zone. That becomes your area of interest that you want to look to take your trade from. Okay, so that's going to be, so you want to wait for price to return into this zone. Now, this is the last sell momentum that took out this previous low before it went above to take out this high. And so when it's coming back down, you don't need any other inducement. Why? Inducement has already been grabbed here, so you can take your price higher from there. Very simple strategy, but very effective. Okay? So, and this is for the bullish scenario. Now, if you are talking about the bearish scenario, the same concept, guys. Look at this. The first day, mark out the high and low and wait for price to come take out both the high and the low with a candle wick, with a sweep. That's what you need. But as you can see, the second day, price closed below this low. No problems. So as printed a new candle here. Now, you need to mark out your high of that candle, and of course the low of the candle, mark it out. And as you can see, this third day candle closed below it. This is not the kind of thing you want to trade, unless you want to trade continuation. But we want to trade reversal, a powerful reversal signal for that matter. So you sit on your hands here. Now the next day, this candle was printed. Mark out the high and the low, and that's that. And as you can see, this candle, the next day's candle, closed below it. We don't need that to happen. But look at what happened here. Now, The following day, price printed this high and then printed this low here. Look at what happened. For the first time, from day 1, day 2, day 3, day 4, for the first time, price did something strange. It went back higher to take out the high of this previous day's candle, and after taking out that high, it closed below that high. So the smart money has swept liquidity resting above this candle's high, this previous day's candle's high. Okay, once you find that sweep of liquidity, that's what you want to do. That's what you are waiting for. So what do you want to do? You want to take price lower from there, because 70 to 80% of the time price will go down. Does it mean that it happens 100% of the time? No, but at least 70 to 80% of the time you'll find price behaving in the way I'm explaining to you now. So once you find this on your daily time frame, remember this must be on the daily time frame, you now go to the 15 minutes time frame. This is the 15M, and on the 15M you will start seeing lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then price, after printing this low, went higher for the first time to do something strange. It took out the high, that candle's high, okay, with a candle wick. It has to be with a candle wick, not with a candle closure, with a candle wick, just as you saw here. Okay, and after that you wait for market structure shift. So price will have to come down again to take out this low. Once that happens, that shows to you that this is a market structure shift, and therefore what you want to do, you just want to take your trade from here. This is the last buy momentum before price comes down to break this structure here. And because price has taken liquidity here, you don't need to wait for any other inducement or any other liquidity. So you take your trade directly from here to go down. Simple strategy, but very effective. I hope you understand. Please go over this video again and again, and then you will get to understand what I'm talking about. Let me tell you what your TP, okay, and your stop loss. Once on the higher time frame, it takes out the low with a candle wick like this. When you go to your lower time frame, when you enter your trade, your point of target will be this high. There are two ways you can take profit. It's either you target that high, okay, on your higher time frame. You know the candle opened here, so target the opening of this bearish candle on your higher time frame as your TP. That's one way to set your TP. The second way is that you can set your TP 1 to 3 flats. 1 to 3. Simple. The same thing here. Price takes out this candle's high. You can either set your TP to this candle's close. Set your TP to this candle's close, or take 1 to 3 flats. So these are the two ways you can take your profit. So let me take you to the live chart and show you 1 or 2 examples. Now let's start from here and even look at something here. Let's assume that this is day 1. Mark out the high and low. Okay, just mark out the high and low. I just want you to understand, that's why I'm doing it like this. The high and low of that candle. Where is the low? The low is here. As you can see, the second day's candle closed below. This is not what we need. Now the second day's candle, mark out the high and low. I'm trying to simplify it for you to understand. So this is the high and low, and this candle closed below it. We don't want to trade this kind of thing because we are trading reversal. We are not looking for continuation trade. Now this other candle, this next day, look at what candle printed. Candle printed this high, and where is the low now? Look at the low of this candle, and this next candle closed below it. This candle is an inside bar. It's insignificant. This is the one that closed below this low. We don't want to trade this. Now the next day, look at what happened here. This candle printed this high and printed this low. Let's look at what happens there. Okay, so what happened there is that this next day's candle is an inside bar in between the range of this high and the low of this black candle. So this is insignificant. Now the following day, look at what happened here. Okay, look at what happened here. Price took out the low with a candle wick and closed above this previous day's low. This is what you want. So if we are to play price, let's see whether we can play price from there and see the opportunities we can have in the market. So it took out the low of this with a candle wick. So we want to trade the reversal. Where is going to be your target? Your target will be these candles. Okay, the opening of that candle. That's going to be your target. So let's get to the 15M and see whether we have any opportunity in the market here. Okay, so let's see. Let's see. This is where price swept the liquidity of the previous candle. Understand? Remember that? And this is our TP if it gives us any reason to enter the market. If we don't have any reason to enter the market, then we don't need to. Okay, we don't need to. I'm trying to be slow here so that you can understand everything I'm doing. So this is where it swept. Now price has come down. We need market structure shift, and I told you the shift would be when it takes out this high and close above it. Then we can take decision based on that. So let's continue to advance price. Now let me make it faster. Okay, as you can see, it has not taken it out. We need a candle closure, and as you can see, that has not happened just yet. So we continue. So it's either it takes out this high or come to take out this low. If it takes out this low, then we need to go back to the daily time frame and re-strategize. Okay, so let's continue. So as you can see, it has already taken out this low. Look at it here. That low has already been taken out. So meaning that we didn't have opportunity to enter that market. So we go back to the daily time frame in this case. So here we are on the daily time frame once more. Let's look at it. What happened here? So this setup here didn't work out. Let's play price one more time. Look at what happened here. This is the next day's candle. Look at this next day's candle. I want you to take note of something here. Let me remove all these ones. Take note of something here. This is the high of this candle that wicked below this one that first time. Now this is the low of that candle. Look at it carefully, guys. What can you see? Now this candle swept the low of this previous day's candle again. Now how do we take the trade from here? In this case, look at the opening of this candle. If you use this one as your target, that's too small. So in this case, I want to do 1 to 3 flats. Okay, so let's get to the 15M now. This is the 15M. So there was a sweep here. That's where on the daily time frame is swept. Now we want to wait. Remember, this is our this is not our target. This is the high of the previous day's candle. Okay, so I want to do 1 to 3 as target. That is if it gives us what I want. Now what do we want? We want a market structure shift. This is the shift I'm waiting for. Once price takes out that, then we can take decision. So we continue to play price. Okay, so as you can see, it has taken it out clearly now. Now This is the last buy momentum, I mean sell momentum. This one is the last sell momentum before this break. Okay, this shift, that's the last sell momentum. Now we want to refine, because this is too large, so we want to refine this zone. That's the first one we can refine to. This one, this is the next one we refine to. All right, these are the two areas of interest we refine to. Now take note of something here. We have two areas of interest, 1, 2. So meaning that you will need a confirmation here, because you have this decisional and extreme. You need confirmation in this case. So what's going to be my confirmation here? Well, for if this first zone is going to hold price, then I want to see this candle break above this high for me to know that price wants to go higher. Once it breaks above, and then this is going to be my area of interest. Why is this going to be my area of interest? Because look at this. This candle swept the liquidity resting below this previous candle, and after that it closed above. So if price breaks this structure and comes back down, I want to take trade from there. So let's continue to advance price. Look at what is happening. This zone is still valid. You know, it didn't close below. And I hope you know that you have to give a buffer to your trade. So let's continue. So price has tapped into it now. This one. This was what I was waiting for. You want to go long. And where is going to be your target? I said we target 1 to 3. Let's frame the trade first of all. This is going to give a buffer to your trade, so, and then you are targeting 1 to 3. This is 283. We want 1 to 3. So let's do 1 to 3. Okay, that's 1 to 3. All right. So let's continue to play price and see whether it will go our way. Boom. That's it. Our take profit. Simple trade setup. That's the first example. Let me take you to another example right now. Now here is another example. Take a look at this. Let's use our tool here and mark out the high and low. Let's start from this candle here, so I want it to be clearer to you. Now this is the first day, candle high and low. As you can see, the next day's candle, this next day's candle close above. That's not what you want to do, because you don't want to trade continuation. You want to trade powerful reversal setups. So you sit on your hands. Now look at this candle that has printed the following day. Mark out the high and the low of that candle. Here is the high and the low of that candle right here is here. That's the low of that candle. Now as you can see, this next candle, this next day's candle took out this previous day's high with a closure. That's not what you want to do. And so we continue until we'll find a sweep. Now this is the high of the next day's candle, and here is the low of the next day's candle. As you can see, this next day's candle is inside bar. It didn't take out the high, neither did it take out the low. This is insignificant. Okay, so now the following day, look at this candle, took out the high of this previous day's candle with a candle closure. That's not what you want to do. Okay, so we continue. Sit on your hands, and then the next day, look at this candle's high here. Candle's low is right here. So as you can see, price took out the high with a candle closure. We are still in continuation trade. We want to take reversal trade. We are still in continuation trade, but we want to take reversal trade. So you wait. Now remember, this candle is inside bar. It's insignificant. Now this candle has closed above. So this candle that has closed above, let's mark out the high and low. So that's the high and low of that candle that closed. Okay, now take a look at what has happened here. For the first time, okay, a strange thing happens here. Price came and took out the low of this previous day's candle and did not close below it. It worked. This is a sweep of liquidity, guys. Once you find this kind of thing, you know that you have high probability scenario in your hands. So what do? Remember, this is the daily time frame. This is the daily candle. All you need to do is to switch over to your 15M and wait for market structure shift. So we are going to the 15M right away. So 15M. Now let's get back to the daily time frame. Let's identify our target first of all. What we want to target here now is 1 to 3 flat. Okay, you can either target 1 to 3 flat or you target this high. So let's get to the 15M. This is where price swept liquidity on the daily time frame. That's all you need, that sweep of liquidity on your daily time frame. Okay, so now let's look at what happened here. So where is our market structure shift? Look at here. This is our market structure shift. If price takes it out and close above it, that's where we want to enter the trade. All right, so now price has closed above it. So where is our area of interest here? Well, our area of interest is simply this one. It's simply this one. So we want to wait for price to come into this one. Give a buffer to your trade. Always give a buffer to your trade. So that's our area of interest that we are looking to take this trade. So as soon as the next day's candle open, we want to target this zone as our area of interest. So let's continue to advance price and see whether price will come into it or not. Okay, so as you can see, we have been taken into the market right here. We have been taken into the market, but is it going to go our direction? We don't know yet. Now, if we frame this trade here, but remember, you can go down to 1 minute to refine your zone if it's too large for you. Now, so we are going to take 1 to 3 flats, like I said. Let's we've given a buffer already, so that's where your stop loss is, and then we want to target 1 to 3. Okay, roughly 1 to 3 there. So we can continue to play price and see whether it will go our direction, but we can simply target this high, but 1 to 3 first of all. So let's continue. We are still in between. It has not hit our TP. Let's continue. Boom. Can you see that? Hit. So we can go back to the D1. Now this is final example, but before I go ahead to show you this example, let me just say something here so that you can know. When you are using this strategy, you also need to pay attention to price behavior. The way price is reacting, is behaving, you need to identify it well so that you don't want to be on the wrong side of the market. What do I mean by being on the wrong side of the market? When you are trading something like a retracement phase, you know, you need to understand that that is a retracement phase. For example, look at this. Look at these massive bullish candles. Okay, these are huge bullish candles. These are momentum candles. And now ask yourself this question: even though price is going to reverse from here, it's going to be in a retracement phase. It's not going to be that it's going to form complete reversal, but you can take advantage of this. So if you are always going for 1 to 3, you need to reduce your target to 1 to 2 when you are trading retracement phase. That's what I wanted to point out. So we can go ahead and let me show you this example. Look at this. Remember, this is massive, massive, massive. So if there's going to be anything here, there's going to be a retracement here, but it shouldn't be it shouldn't be handled as if it is a pro trend. Okay, so now you have your high taken out. So I want to be fast about it. That's your high. It has been taken out. So once it's taken out, you go to your 15M. So that's where price took out liquidity on the higher time frame, that is. Okay, so as you can see, that's where it took out liquidity on the higher time frame. And now this is your market structure shift, because that's what you're going to be waiting for. This is your market structure shift here. Once price takes out that, then we want to enter our trade from there. Let's see. Okay, so price has closed below. We have gone too far. Let me take price out from here. This is where we close below. So where is your area of interest? This is your zone. This is the last buy momentum before the push down that has led to this break of structure. So give a buffer to your trade. We want to see price come back and tap into this zone before going back down when the next candle opens. Okay, so let's see. So we have been tapped into the market already. Now remember, this is reversal. I mean, this is a retracement phase. So we are going to target only 1 to 2. So let's quickly target 1 to 2. Okay, so 1 to 2. So we continue to play price and see if it will go our direction. Let's see. And I think it has smashed our TP. Let's see and see. No, just a little. Okay, boom. TP smashed. As you can see, TP has been smashed 1 to 2, because this is a retracement phase, so we don't want to hold it for too long. Okay, simple strategy, guys. Simple strategy. All right, guys, so if you enjoyed this video, please become part of the family by hitting the subscribe button and turn on the notification, so that anytime we publish a new video like this, you'll be notified about it. Okay, and if you want to take your trading to another level, okay, you can join our VIP community. The doors are open. We have given a discounted, massive discounted price for our mentorship, all categories of our mentorship levels. All right, the 14th of this month is going to be my birthday, so I thought it wise that I should give opportunity for as many traders as possible who want to come and learn the rudiments of trading the market and becoming profitable to be part of our VIP community. So I've given a massive discount. All right, we have 2 categories of our mentorship. One is known as a silver package or silver category, that we have reduced it completely to only $40. So if you have $40, you can become part of our VIP community. And then the second level of membership that we have, VIP membership that we have, is the gold category, which is the one-on-one. So one-on-one is only for $60 right now, but before the 14th, this promo would have been over. So please hurry now and take your seat. We have only 5 slots for both categories. All right, for both categories. All right, guys, I see you in our next educational video. Thanks for watching.